Hello traders, welcome to today's video. It is the start of a new week, which means new opportunities, new trades to be had, and yeah, quite an important week I think in the whole context of the market is upon us. So I hope as always that you had a really good weekend. I hope you've woken up feeling fresh and excited and ready for the opportunities that lie ahead this week. To me, it feels like a proper Monday. I've been tired all day so far, so I'm getting this video out to you a little bit late today. But yeah, let's shake that out of our system. Let's get some energy and let's crush the market as always this week. So what do we want to start with? The high time frames. Okay, so the higher time frames, I think this is looking really good. And the weekly close, I want to start off here with the weekly close that we had. And we've been talking about this towards the end of last week of how it was inevitable that we were going to get a close around that 25k level, like 24 to 25k level, because there was so much going on within that. So our weekly open here at 24 to 80, basically, ending up with an engulfing candle here, basically closing above the prior 2 weeks of price action, and actually managing to close above the wick there marginally, okay, just by a few dollars, managing to close above the wick there that we had from our January highs. So that was looking really good. And I think as we go into the end of the month, this is also going to play quite a big part in the market in general, is those January highs are going to become quite an important level at some point, I do believe, if we can continue to go higher. Now, the other thing that we did have there was obviously the weekly close from back here in August, and price just failed to close above that. So if we start to zoom in on these levels, we can see here, let's basically draw on the highs from back in August. Let's draw those weekly levels on here, and we can see what happened on that Sunday. And this happens so often. Whenever the market comes into a really key contextual level like this, and you're looking at the high time frames, the market just does this, okay? And it could have been, it was very, very clear that like when you look at everything that we have around there, that's where the week was going to close. And that really is what we were looking at and what we had been looking at throughout the rest of, well, towards the end of last week. So you can see the reaction, okay? You can see the reaction that we had off of those August, was it, last year highs, getting the SFP off of those, getting the rejection, price just floating its way back up. We were able to take that really long, nice position on Friday that took price up towards those highs. And then again, a second rejection, not actually getting that SFP off of the highs there, but then getting another little rejection down here as we kind of go into the Sunday night and then continuing into Monday morning. And you can see, okay, that weekly level, the previous January highs, and then the weekly open here, just slap bang in the middle of that. And that's what happens when the market is playing around with these high time frames and really key contextual levels. It just gravitates towards them as you get the reaction from the market. We had exactly the same thing on the monthly close last week, and I imagine we'll get a very similar situation next week, again, when the monthly candle closes. So that's to start things off. Okay, we've had a close that is, I mean, you'd consider it bullish. You've had an engulfing candle, you've engulfed 2 weeks of price action, fully, including the wick. Not managing to get a close above these August highs, but again, that's what we're going for so far today. So we are seeing that move up there at the moment. Now, if we are to zoom out and we're actually to look at the levels, because at some point you're going to have to, if you're still bearish, you're going to have to just at some point realize that we're in a very healthy uptrend currently within the market, and above here there really is not much resistance. Okay, we have gone through a long accumulation that has been going on since last summer, and price, I believe, is on its way back up to 50k. But it's a long way off. We're obviously going to be looking at this as there's going to be twists and turns along the way, but I do believe that that is likely where we are headed at the moment within this market. There's a lot of confluence up there. There are going to be pit stops along the way, but I do believe that as the rally that we're seeing at the moment, I think this has a lot more legs in it before we start to see new participants come into the market. And that is what we need with an uptrend. an uptrend isn't really going to stop until you've got the liquidity that you need in order to draw price back down again, in order to seek the liquidity to the downside. And I don't think that's going to happen until you get new participants, until you start seeing FOMO, until you start seeing irrationality back in the market again. And for price to go up here to like 26, 27, 28, 30, I think that's very likely. But I don't think that's going to bring in new money. At the same point, as I don't think if we break up to 32k, I don't really think it's going to bring in new money. I think we need a sustained attack towards these highs that can take us up towards that 50k, and then we can distribute and go for a bigger retrace, maybe back down to the levels that we're at now, because we are starting to establish this support here. So if we can get a big move up over the next few months, then we go for a longer, elongated bear spell again, then I think that's what I would like to see from this market. But let's not get ahead of ourselves. Let's just trade it level to level as always. But if you wanted a bias, that's kind of the bias I have, because as soon as you start to break through this, there is very little in the way of resistance above us. You've got to be looking at the high volume that we've got here, the order block, and the previous highs that we have at 30 to 32k. You could also be looking at this as just a range. It may well continue. If it does continue, then I would have to quickly switch my bias and be looking towards those yearly levels. Because if we fail to get a strong break above here, then I do think a move down towards the yearly is more likely. And obviously the dollar is going to be very important, the context in which we're looking at for the next few months. Whether the dollar is going to see a rejection here, which I think again is fairly likely, or whether we're going to see that big move up towards 110 on the DXY, which again, we'll just cover that in a moment's time. So yeah, Bitcoin on the higher time frames is looking strong, and you've got to accept that it's looking quite strong at the moment. So I'm sticking with that plan for now until I see a change. Now, if we go down onto the lower time frames, okay, then what we have here, I've overrun it with all of these levels at the moment. Then we had a trade earlier on today. So I had taken actually a short position as price came in here. Let me just load all of this up. We had our typical like 130-ish pivot earlier on where price came up, took out those London highs, came into the little gap, like filled in the imbalances that we have on the chart here. And I was able to take a short position. That's the first trade that I've really taken today. I took profit as we had the SFP off of the lows, and then as price started to bounce, I closed out of that position because I am anticipating higher today. I do think that it's quite likely we see those weekend highs taken because they happened over a weekend. Now today, going off on one again, today is of course President's Day in the US, so the New York markets aren't open, which is going to lead to a little bit more weekend-ish price action. But I do think that we're going to get enough today to take out those highs, and probably then, I mean, the levels are kind of clear to the downside now. Once we have taken out those highs, you're looking back down towards here, which is probably roughly your point of control for the day, unless that's moved up now. Okay, yeah, you've got a decent amount of volume down here again, though. So if we are to move up, you'd be looking back down there at like 24,500 as a target for any short positions, which at that point will probably line up quite nicely with some fib levels and so on. So yeah, looking kind of good in that respect there. So still looking for more upside. I've got my alert up here at 25,200, and I'm waiting for that to be taken before I do look for any further short positions. Now, if we do start to break through that with volume, then of course 26k is the next target, but we really are void of like much liquidity above us. So this does have the potential to really start to push higher fairly quickly. This chart is messy. It wasn't this messy just a minute ago. There we go. Let's just clean things up again. If we are looking to the downside, I would consider the move down that we had overnight here to basically be that touch of the previous day point of control, or no, sorry, the Friday point of control. And we have got some POCs left behind from that big move up last week. However, at this stage, not really looking for those to get filled just yet. Another interesting thing here, CME, okay, it opened with like zero gap. So I can't even see where it was where it opened up. That's how much the gap, yeah, it literally opened where it closed. Okay, so there's your Friday, and there you go into the Sunday. So there's your tiny little gap there on the CME. And yeah, price just continuing on as normal. So if we go over onto the DXY, then a few interesting things that we have here. Again, if we start off on the weekly time frame, with Bitcoin managing to get that bullish engulfing candle, what the DXY failed to do was to close above this weekly at 103.911. It failed to get that close above, and we have seen a little bit of a push up overnight as Bitcoin was dropping, but then that bigger rejection. And if we're looking at a range here, again, it's not the most technical asset. This is the DXY. It is an index. But if you're looking at the range that it put in, coming up to that, basically you stack the range and you come up to the 0.5. So you've had like a 50% move above the top of the range here. We're pinned back below that. We're around about that 2017 high. We're hovering around that weekly level. This to me looks like a little bit of a deviation before we can be looking for more downside. And that would lead me to the same targets towards the downside, which is coming into here, filling in these inefficiencies that we have below, leading to a pretty good rally on the risk assets and just continuing this range for now. Now, if that doesn't happen and we do continue to break here, then we've got the weekly level above. But ultimately, like I say, if this can get a break, a significant break through that 103, 104 region, then I do think a move up towards 110 is more likely. And then you're looking for like deeper retraces on other assets there. The S&P 500, not too much to add. Okay, it's still at that same support and it's still just holding this range. So you got the 618 there, the golden pocket. It's still holding within there. You had the little SFP that we got on Friday. And then, of course, today, although futures are open, the S&P 500 itself and the stocks themselves are not trading today. So it's going to be a little bit more weekend price action. But ultimately, I think it looks good. I think things are looking quite healthy here. You've broken out of a long downtrend. You're holding here after breaking out, and I do think continuation up is looking the more likely option at the moment. So yeah, I remain fairly bullish, and I still think that in order for this to really give like swing short opportunities, it just has to go higher, because when you zoom out and you look at where we are, yeah, there's a lot more that it can go. Ignore the Bears win thing. That was a little thing I did on Twitter recently. But yeah, I think a continued up move is looking pretty good. I don't want to do anything too much more technical on this. There's altcoins, obviously, are moving quite well at the moment. I don't have any particular altcoins I want to look at this time. However, I will be doing some more streams and more updates as the week goes on. So I will update you on those when I have something to say. On that note, yeah, I think as always, please do go and check out tauruscrypto.com if you are new to the channel. Okay, you can go visit our website, tauruscrypto.com, where you can learn more about our crew. You can also join our Discord over there. So on our Discord, we are giving consistent daily updates. Okay, I gave my weekly update for the week this morning. We do have to note that it's a fairly low impact week in terms of economic data, nothing that's really going to be looking to move the chart significantly. There is FOMC minutes, there is some other stuff, but it's like short-lived volatility rather than anything that's really going to move the market, in my opinion. And yeah, then of course we were going over some of the trade ideas. We were following this trade idea within the crew earlier. And it's just a generally very nice community to be a part of. So if you do want more information on that, then please do go check out the website. But on that note, I have nothing further to say at this time. So I will update you some more when the market does something more. Thank you very much. And yeah, have a great day. And I will see you soon. Cheers. Bye.